Today is modeling time, and I don't mean catwalks, and I don't mean fashion, I mean financial models, and I refer to our new Robotaxi simulator model. That model tells us how much worth Robotaxi as a division of Tesla is for the share price, even all the way down to the discounted cash flow value of that revenue stream. And I will explain exactly how it works. We start with a look at Tesla today at 350 to 97. Of course, absolutely ridiculously undervalued for anyone who believes in the greater Tesla story. And I know the mockery is always loud for the Tesla bulls, but we have been at 485 all-time high December 18th roughly, and we are down by a lot. Even year to date, we are still down an unbelievable 22%, even though we have tremendous progress with Cybercab launch coming up very soon, September 3rd. And today we are gonna look into this new model that you can get in pioneerlands.org. The model is right here. Let's get started. Go to pioneerlands.org. If you're a citizen, you can access this model, download it, and edit everything yourself so you see how this works. Okay, how do we approach the value of Robotaxi? Very simple. We have base economics input here, and this model, we took good care that this model makes sense. It is a derivative of our greater Tesla model, Tesla stock price model, that you also find in the investment research section of pioneerlands.org, also for download, so you can do your own share price and scenario modeling. But this is the subset of the model that looks at Robotaxi. So let me explain how this works, okay? Here we have the economic inputs. All the blue numbers are editable by you. So you can use your base rate per ride. We did some research, of course. Currently, it's fake news that the base rate is $1 per mile, or the price is $1 a mile. There is a base rate currently, to the best of our knowledge, end of August, $3 base rate, and then approximately $1 a mile. It's actually $1.40 in one report. But we are aggressive here and assume Tesla goes all into disrupting this rideshare market brutally at $1 per mile, which is very conservative estimates because they could go higher. So you can edit this if you get more news, right? If we know more, you can just change the numbers. Then we have a 5-mile average ride length, okay? And then we calculate very quickly and easily the effective revenue per mile, okay? The effective per mile average price Tesla gets, which is a very important number. We have then the input, how many miles, paid miles per Robotaxi per day do you get in average? 200 miles paid. So depending on the empty rates, it's probably 300 miles in total that you have to drive for that, assuming you have to get from passenger to passenger. I think a little less than that, probably 250 or something, because Robotaxis should be much more efficient than a human-driven thing, because they can just be wherever the passengers are, calculate optimized routes, and they don't have to go to work all the long, the long rides towards work. They don't have to take lunch breaks and ride to a restaurant to eat. They only need electrons for food, and they get it at night. So here you have operating days per year, which is very important, right? 330 operating days. So we give them a it's like basically European vacation time here. You get 35 days off for the Robotaxi, for the Cybercab, so they can book a flight, go on an island, chill, drink margaritas at the beach after their hard work of 330 days a year. So these Robotaxis could get their own island, and vacation there for 35 days. The Robotaxi COGS, of course, this is a very difficult to assess number, but we have a good model, and this 65 cents per mile I should actually do this here per mile. This is actually very important and very conservative. 65 cents per mile is a pretty conservative assumption because that goes into scale. So these numbers are fixed. The model is simplistic in that sense that, at 160,000 Robotaxis, we have the same COGS as with 2,000, which is not accurate, but it's an approximation, and the reality will be probably better for the valuation. And that calculates then, the black numbers are calculated 59% gross margin. For every dollar made, you keep 59 cents. OpEx as a percent of revenue, That's important, the operating expenditures of that division. And then we have a PE multiple. That thing is also, that is, something you can definitely assess yourself. What is the price to earnings multiple for the Robotaxi division in your valuation? But given the high growth we have here, 200x is probably quite conservative and the market will probably value it higher. This is not that important, this number, how many we have right now. Now, before we go into the actual model, we also have assumptions here. These assumptions are very important. How many diluted shares do we have? 3.1 billion. What is the effective tax rate? Because we are calculating discounted cash flow here. So this is a little geeky. You don't have to change anything. We did good research. 17.5% tax rate is actually the right tax rate, in our opinion. There are some experts confirming that. Current share price, of course, Tesla GAAP net income of 2025, because as you will see, we will provide a multiple so you can see how much of the 2025 net income, what is the multiple Robotaxi alone brings into Tesla. And that multiple is based on that number here, 3.45 billion. We have a discount rate for the discounted cash flow calculation for the exact share price or true value for the present value, 9%, also something Damodaran, he's the valuation expert at NYU, confirms that roughly 10.1529% roughly discount rate. Here, very important, Robotaxi vehicle cost. How much does it cost to manufacture one Cybercab? We assume $16,000, which is in the beginning not true. It will be closer to $30,000 at very low rates right now, probably. And then we'll go to probably below $16,000 at scale. So if you want, you can increase that if you want to be more conservative, but in the millions, this is going to be not more than 16,000. I'm very sure about that. Then we have fleet growth beyond 2030. For the discounted cash flow model, we need that. 2031 to 2035, we assume 30% growth, which is very conservative. Terminal price earnings value, these are all geeky things to compute the DCF. Our DCF is calculated based on the next 10 years of discounted cash flows. And then we add a terminal value. And the terminal value is not calculated in the conventional discounted cash flow model way, because I think this is an inappropriate way that distorts reality too much. It's not market reality. So what we do is we are assuming we sell the entire company Tesla, or in this case, the entire Robotaxi division. Of course, we are not going to sell it, but it's just to give you a value in 2035. We take the net earnings, net income of 2035 and multiply it with that number, 30x, pretty conservative, given that we have a 200 price earnings right now, but we assume for 30x you sell the company, discount that number back and add it to the discounted cash flow. And we have a probability of success. This is one of my favorites here. Normally that is contained in the discount rate, but I like to be a little conservative and say our assumptions, what are the odds we are wrong? What are the odds all of this doesn't happen? 20% in this case. So the risk of total failure is 20%, which is conservative, and which means we multiply this final value by 80% because that's the actual probability. So we discount it even further. Okay, now we have it. Now you don't even have to understand all of that, but if you want, it's also in the Pioneer Academy where I have a video coming out over the weekend where I explain this in more detail. But for you guys, you just want to know the outcome, right? We will get to your number. We will get to the number that tells you exactly what the current discounted cash flow value of the Robotaxi division is as a share price. You probably have seen it on the thumbnail, but we will get there. I will explain. So most important for the model here, you can enter the amount of Robotaxis in 1,000 in Cybercabs. Think in Cybercabs, it's all Cybercabs from here on now out. The amount of Cybercabs that will be live. You might say 2,000, so 2,000 end of the period, end of Q3. We only have 1 month to go. We only have September to go. You might say, Joe, you're nuts. 2,000 Cybercabs live within the next 30 days. You're crazy. And you might be right. I did this on purpose. If you want, and you say this is ridiculous, it's going to be only 0.3. It's only going to be 300, 200. Let's say 200. Sure, we can do that. Well, let me adjust this. We can do this. And it's going to be 200 Cybercabs live by the end of September. Maybe you even say that is optimistic. I don't think so. We will see much more. I think that number is too conservative. Right? And you see some changes here, but I will explain in a second how this works. I assume, and that's why we have the model, that's why you can go to pioneerlands.org and download this model, 10,000 Cybercabs by end of this year. I stick to my original prediction where everyone said, Joe, you're crazy. Maybe they're still saying I'm crazy, but I'm still sticking to it because the reason I said this is Cybercab production ramp. and all the actions we see Tesla taking. And when I triangulate all these different leading indicators, I'm getting still to over 10,000 end of the year. Maybe I'm wrong. I don't even care if I'm wrong, because then I will be right a quarter later. This doesn't even matter. But I do think I'm sticking to 10,000. But this is the beauty of the model. You can say, Joe, you're crazy, 5,000, okay, and you change it to 5,000, right? The whole model is, of course, dynamic. Once we hit that trajectory, then we just grow. Hey, on this channel, we do something very important. We deeply analyze, understand, and predict capital, AGI, and politics. Not just to beat the markets and make a lot of money, even though that's important, but also to build a new society and make the future good for all of us, the pioneers. If you want to help me on this journey, you can do that by doing a very simple thing. Like and subscribe. It helps me a lot. Thank you so much for your support. And let's get back to the video. It's very simple. I think we grow to 20,000 end of Q1, 30,000 end of Q2 next year, 45,000 end of Q3, and 60,000 end of 2027. Actually, 50,000 is our assumption in the base model, but here it's 60,000. And you can change this however you want. Now, since we have the whole model set up, it then calculates for you, okay, the average fleet earning during the period. Here is a comma missing. So you see that in these numbers, and you see then Robotaxi revenue in period in millions of dollars. So we have $9 million here earned if we have 200 live based on these inputs, right? And we have $4 million net after taxes. These are after-tax earnings. But then you see it grows very quickly, and it grows to $1 billion in that period earnings in Q3 2027, which is pretty significant, and $420 million in after-tax earnings. And what you see here is the annualized earnings run rate. That is maybe the most important number. That tells you what is the annualized run rate of after-tax income. And what you see is you hit the $1 billion of annualized earnings run rate already, already in Q2 2027. Here, 1.12 billion. That is just calculated at this thing here times 4, because that's the quarterly. This is times 4. And this number, very important. Now you see the percentage. This is very important for you guys. This is very important if you're interested in stock price. You see now the percentage of total Tesla 2025 earnings. Okay, let me explain. Given all these inputs here, which are partially pretty conservative, at 10,000 Robotaxis by the end of this year, Tesla will already make, as an annualized run rate, this number, 7%, 7 of its entire corporate earnings of 2025 through Robotaxi. And more importantly, it grows from 7% to 19% within a single quarter, and then hits nearly 100%, nearly doubles the entire earnings as a run rate end of 2027. That is why Robotaxi is so important. Of course, this is all a function of these numbers. Will they have tens of thousands live? The critics say no, but anyone who thinks in first principles and sees the leading indicators knows, of course they will. What do you think they're doing all day long? What do you think they're preparing? A giant billions and billions of dollars infrastructure, and make it hot, make it live, print these cyber caps. September 3rd, launch them. So you must be in complete denial if you think the growth rate of Robotaxi will be the same as we saw in that first year going back to June 10th, 2025. Of course, we are now making exponential progress. Of course, this is happening. Now, is it happening exactly this way? Could it happen faster? Yes. Could it happen slower? Yes. But could it happen in a very linear way where these numbers stay in the hundreds? No, that is not possible. It is not possible. Could it be 5,000 end of the year? Could it be 2,000 end of the year? Absolutely. I think it could be 2,000 end of the year, not 10,000. But if it's 2,000 end of the year, then it's 10,000 here. And then it's 20,000 here. It just shifts it all one quarter to the right. Doesn't really matter in the large scheme of things. Let's continue. What am I doing here? This is the important thing, okay? This is the important thing you have to watch. Because what I'm doing here in this row, I'm calculating how much this adds based on the price earnings ratio to the current share price. And of course, here it only adds $1, not a lot. Here it adds $14. Here it adds $42. Here it adds $70. Here it adds $105. So it's getting very serious here in Q3 2027, maybe even in Q2 2027. But here's the thing. Here's why I decided to change this a little bit. What we have to do, because when it comes to Wall Street, things are always forward looking. No one, not even the dumbest little skeptic, will do it this way. They're not going to sit there and say, well, the actual earnings that came in here are 230 million. Okay. Therefore, I increased stock price by 14 bucks. No one is going to do that, because everyone who sees there's actual cash after tax earnings, $230 million rolling in, they're not going to not project out what's going to happen next. No one is going to do this. Even the most conservative person is not going to do that. They are going to do 1 year ahead, looking ahead. They're going to say, dude, we need to have at least a 1 year projected share price target, And that's exactly what we are doing here. So in this row, we are going 1 year ahead here, F30, you can basically see this. So in Q3, we are basically looking at Q4 or Q2 2027 and see if this happens, okay? If we have 200. Of course, you can argue, will they really do it at 200? They will do it latest at 10,000, I tell you. They will say, okay, let's go 1 year ahead and see what that means. And that means $70 added to the share price, in my opinion. And based on the current share price, I think this share price is actually not live updated. We will change that in this model here in the assumptions. The share price is outdated, I think. No, it's actually live. Okay, we have a live share price. So here is basically the share price, assuming this would be added to the share price. It's a little inaccurate because, of course, Robotaxi is baked to some extent into the share price. But you could argue Robotaxi is baked into the share price in a way that ignores this trajectory right now, as you can prove based on where the share price is right now. So I think it's a reasonable argument to argue that comes on top of the current share price, and that would get you to 421. See, it's live updating. So 421. And by end of the year, as I said, all-time highs this year, very likely. End of the year or Q1 2027, just on this extremely conservative assumption here, you're getting to all-time highs. If we do this. Now, I want to just make one thing very clear here. This model is as conservative as it gets, okay? This assumes people are literally waiting for the dough to roll in, $230 million in after-tax earnings from Robotaxi, growing at some massive rate, 100% per quarter right now, 100% per quarter, 230 million rolling in. They are not going to value the stock like this at 10,000. It will be much higher, in my opinion. These numbers tell you what they have to do. What any responsible, most conservative analyst who understands anything about future trajectories, even if they're the most skeptical, that's what they have to do. So that is the minimum forcing function. That's very important to understand, the minimum forcing function. And that is why this model is so valuable. This is a super conservative model using DCF and using a price earnings ratio at 200x, very conservative, given these insane growth rates we assume here that I think are realistic. Okay, finally, just for fun, since we have all the data here, we have it actually in this tab. This is the basis for what I'm saying next. So this is quite a sophisticated discounted cash flow model looking today into 2035, so exactly 10 years, and then adding, as I mentioned before, the 30x multiple on the earnings of 2035 and discounting it back to today and adding it to these 10 years discounted cash flow. So you have basically terminal value assumption plus the next 10 years of discounted cash flow. You can look it all up on this tab. I'm not going to go into the details here. Go to the Pioneer Academy to learn more, but here is the number we are looking at. Let me explain this number. This number is why I'm so bullish on Tesla. Under these assumptions, $439.02 or $440. $440 is the present value, the present discounted value, including a 20% risk of failure priced in, okay? Including the assumption that we have a 20% chance that all of this doesn't happen. Without it's 548, by the way. This is before it's risk discounted. The present value of what is $440? Not of Tesla. The present value of Robotaxi alone is $440 today, fully discounted back. In other words, if you would just give me Robotaxi and forget about Optimus, forget about Energy, forget about TerraFab, forget about the entire rest of the company, the real value, the real present value of Robotaxi is $440, 125% more than the entire company is right now. And that is why I'm very, very bullish. Now we have this model for you, for all the citizens of Pioneer Lands, so you can put in your own assumptions. You can say, you know what, 800,000 Robotaxis by 2030, I think that's crazy because it should be 10 million, or maybe it's crazy because it should be 100,000. Whatever your assumption is, put it in and you will see the difference, right? And if you change that number, the assumptions take it from there, 30% growth rate from there, right? And so you see here, you end up at 800. That is taken from the sheet, from the Robotaxi simulator sheet here. And then you basically multiply that number with 1.3 with the growth rate, and it adds that here. So in this model, we're getting to 3 million Robotaxis by 2035, which I think is like very reasonable. I would bet against that to the upside. I would say we will have more than 3 million deployed by 2035, but let's see. So this model is yours. You can do whatever you want with it just to get a feel for where that stock is. Why is this so important? Because when we look at a crazy stock like Tesla that behaves really weird all the time, you have seen it all. Why are we dramatically below all-time highs? Why are we down 21% year to date? And that's not even from all-time highs. We are probably down 25, 30% from all-time highs. Why? And the answer is no one knows. But what do we know is if Robotaxi is that valuable and we have it under control with our models, we can say Tesla has to get to that reference trajectory sooner or later. And it will very likely be exuberant when it crosses that reference trajectory. The Tesla model at Pioneer Lens basically has also our latest annual or real fair value right now and the price target for end of the year. I'm not going to go into that in this video, but I hope this was interesting. Go to pioneerlens.org, check out the model and play around with it so you see what is happening here. And of course, this is version 1.0. You are always welcome to go to the office hours in the Academy. So in the Pioneer Academy, also on pioneerlens.org, you click on Academy, there is office hours, and you can always ask your questions about the model, and I will respond once a week, go through all the questions, sometimes summarize them, and answer all the questions. So let's do it, pioneers. We go from here and we win big. See you tomorrow.